You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Richard Knowles of Knowles & Associates in Vancouver. He's a financial consultant and wealth manager. Thanks for being with us, Richard.
Thank you for having me, Jim.
Oil prices, the big topic of discussion. Everybody loving the fact that you're watching it, the gasoline prices anyway, fall daily, although diesel hasn't fallen in step with that. And the big reason for that is the rest of the world is still demanding a lot of diesel. The world runs on diesel, just not in Canada and the U.S., apparently. Also, the equity markets, very interesting, up, and then a lot of down. But first of all, let's take a look at oil prices and how they're affecting the global markets.
Yeah, well, basically, when we're looking at structured global markets, there's a lot of built-in factors going on, particularly in the Canadian economy and the Canadian stock markets. You can always see that the world is built on oil simply by watching the stock markets. It's funny. It's not funny, but it's unusual to see. I'm not laughing, let's put it that way. But the Canadian stock market index is a good example of an oil-rich economy. We are very high ranked and in the way the world looks at us. And when oil is off, there's an immediate sell-off by traders all over the globe to Canadian indexes and Canadian stocks. They stay away from Canada, and they stay away from the Canadian dollar. That's another big factor that I know. I'm on the street, so I know what's going on. And the basic point is, as soon as oil starts to go down, our foreign exchange traders automatically discount the Canadian dollar, and so it starts trading lower. Now, that's because we're so dependent on oil for our economy. Now, this is both a good and a bad thing to be realizing. And on the one side, it's good for Canadians to realize just how dependent we are on this black heroin. So I'm sorry to put it that way, but it is. It's a type of heroin. It's a type of drug to our economy, and we're addicted to it. Its parallel is very similar to what an addict would have. We fight at every level. You can see it now going right to the federal level. We've never had this in history, so this is brand new information for anybody who's willing to look at it. You can see our current leader, certainly Stephen Harper, fighting, and I think it's been in the cards for a long time. But once we became the oil-rich nation of the world with the Canadian tar sands, as soon as that happened in the 2000s, we became more and more and more engrossed in this addiction. And our leaders are now doing anything and everything they can. And we've seen this not through theory, but we see it through action. We can visually see it. We have facts. This is proven facts. I'm not speculating here. We know for a fact that Stephen Harper has, in a very concerted affair, has gone and canceled scientific studies on environmental studies. He's completely said, well, not completely said that they're discounted now, but he can have them thrown off the table, even if it's factually shown after a period of time. A study could show, late into the study, could show that there's an absolutely negative effect to the environment for putting in oil in this area, that you can't do it. If it's after a certain period of time, they'll go, well, that study doesn't count. So in the past, we've never had this. We've always had governments that have given a good lengthy period of time for all the studies to come in so that a proper and fair assessment could be done. And there would be no political wrangling in this. All the cards would be played as an open table card game. Under Harper, he has closed that door. He's playing closed card games with the Canadian public. So this to me, I find, is an appalling lack of sense of governmental wisdom. Now, I'm not going to necessarily blame Stephen Harper personally. I don't think I'm in a position to do that because I don't know who's making these decisions. But he's the leader of his party, so he has to take the flak. Now, the current party in power, and you can put any name you want on it, has done this. So if you don't want to get political about it, that's fine. But I'm just stating a fact. The party in power at the moment has made this position very clear. They have pushed aside Aboriginal issues, and something they've historically never done. They've always done some sort of wrangling, let's be honest. The Aboriginal people have often fought against many things that have been, tried to be pushed under the rug a bit. But the fact is they've always had the law on their side, and on many occasions they've had to take the current government, to the Supreme Court to fight for their rights, is, telltale of that story. But the fact of the matter is today, at no time have we seen, at least that I have seen, such a blatant disregard for the needs of the Aboriginal people and the demands and the sheer legal right they have to prevent crossing of their lands of different types of environmentally sensitive and things, certain issues like pipelines and other things that could affect their food, the very things that they actually live on off the land. So the actions of the current government are very clear. They look exactly like an addict who is completely and utterly addicted to their drug. They must do anything and everything, including, if need be, lie, mislead, try and do anything they can to try and make this drug happen. That's what I see the current Canadian economy becoming. Now, I've said that before, Jim. I've said that on this show. I've used that analogy of the heroin drug, of black heroin drug. And it is a very dangerous place to be, because a lot of Canadians do not see that to be the case. And that's the risk we're running. And I think at this time, that's a very healthy, while painful, it's very healthy for us to become aware of this. You can see it every day as the trades are going on in the stock markets, to see if you're a heavily weighted Canadian stock market portfolio holder and you're in the index, and a lot of ETFs, exchange traded funds, are imitating the Canadian index, and a lot of investors are following, are aping the crowd to try and, doing it themselves. They're buying ETFs on the TSX, and they think they're getting a cheaper deal, and they're just, they see the big sale of the ETF is you can just grow. Look at the Toronto Stock Exchange. It's grown over time. What have you got to lose? You're going to win. Why bother with a mutual fund, for example? It's managed for you. Don't bother doing that. Just get a cheap ETF and go for that. Well, ETFs are just as risky as a mutual fund. In fact, in the top 10 reports of any Morningstar data I can pull up, you'll see ETFs don't appear in the top 10 returns on the 1, 3, 5, and 10-year averages. There's a reason for that, And ultimately, there is this, what I call the challenge that people have when they revert to the mean of investing. And things, trying to chase making things cheaper does not necessarily chase going for quality of management and quality of investment portfolio management. And there's a good price you can pay to get good quality. And these are the times, and unfortunately they're painful, but these are the times when the realization becomes better and more clear to the consumer in Canada. It's a very painful transition, but it wakes us up again to not be so blasé about how we invest, and not to be so blasé, if you like, about how our economy can just certainly recoup. I don't believe that's always the case, particularly now when we've become so dependent on oil. So that's a good thing out of all of this. The negative side to all of this is that we're also realizing just how desperate we are for the oil. And so therefore we may do, as a consumers across Canada, if we buy into this, if you like, addiction, then we will agree to almost anything to make it happen. We may say, yes, their environmental studies have come in and said, there's no way we should put in a Trans-Canada pipeline across northern BC or a Trans-Canada pipeline to the U.S. We shouldn't do it. But you watch all the governments in the U.S. and Canada work together to try and make it happen anyway. They'll ignore the studies. Obama, to his credit, has been fighting against, he's been not necessarily fighting against the Trans-Canada pipeline, but he says the evidence has to still be weighed. He's a good leader for his country, at least in this regard. I certainly can't criticize him. He's waiting for the evidence. And when the evidence comes in, it will be weighed, and at least in his court, and in his court, if he sees that the environmental studies show that there's a far deeper concern, he will say no to it. But clearly, like for example, the Republicans in the U.S., which is their conservative party, and the conservative party here under Harper, these are the oil boys, as we call it on the street. They want to push this through at any cost. They're the addicts. They want the money, and they want the money now. And their actions speak clearly louder than words. And that's what the reality is today, this battle between both ethical and moral, and of course environmental and many other issues, and also to wean us off of this heroin. Because I think the Canadian economy and the Canadian people have a lot more to offer than just oil. Yes, there's a lot of money there sitting in the ground, but to be honest, the more we become addicted to that one thing to support our economy, the more dangerous it becomes as a thing to lose. And eventually, oil is being pushed away from being the number one, energy source in the world. Today, there was a study that just came in this last year, that Canadian jobs have had more. There's more new Canadian jobs, that are being created today for green energy than there is for the oil sector. And that's not surprising to see because the oil sector's been hammered this year. But overall, there's still more jobs in the oil sector, obviously. But the absolute new job growth is happening in environmental areas, which is fantastic because it allows us a diversity of our economy in other areas of energy that we would otherwise not have access to. But I don't believe that that trend will continue. If oil gets back up, that will drop off, and new jobs in energy, of course, will all be back in oil. So this is the danger that we're trying to work with today.
We'll have more with Richard Knowles, and we'll be talking about interest rates right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Richard Knowles of Knowles & Associates in Vancouver. The Bank of Canada just a few weeks ago was talking about higher interest rates in the spring. Now there's kind of a hint that, well, if the oil patch is in trouble, the oil companies, to get back on their feet, will need low-cost money. So now they're hinting that we might see lower interest rates. Is that a real possibility?
Oh, yeah, for sure. Well, not for sure. I should say yes, for sure we are. The Bank of Canada has now finally, woken up again and said, okay, yeah. What we said last week was under that week, it would look pretty good. 2 weeks ago, everything looked quite rosy. Oil at least was at a reasonable level. Actually, this is what I'm referring to is just before the Saudi meeting, which said they're going to keep the taps the same and they're going to let the oil drop accordingly. So, yeah, there's a lot of movements in play that I see anyway. I may be wrong on this, but my speculation has been that there is some sort of backroom dealing going on. There's been a U.S.-Saudi interaction to keep oil where it is. There's been no emphasis to try and push up oil prices, particularly because they're trying to control Russia. Russia is a wild card at the moment in the world. And that's a nervous concern at very high levels. So it wouldn't surprise me, let's put it this way, to see that there's backroom dealings going on with the Saudis and the U.S. in particular to try and keep the price of oil down so that Russia will not profit from the sale of oil, which they are a very major seller of oil in the world. They want to try and put pressures on their economy without being open about it, the way they were with Iran, like putting them under pressure with sanctions. So this is one of those big level political plays that I see. As a son of a diplomat, I've seen these actually played out behind the doors, and I know that they exist. You can't prove it, but it sure is an interesting timing to see this happen. And that's been speculated by others as well, by the way. Now, while that's said, we have we're basically stuck with the Canadian economy is revolving around that. And of course, as soon as we see a negative slide, the Bank of Canada will take a turn on that and they'll pull back and they'll change their mind. They go, well, the current stats show us that we're struggling as an economy, and as long as oil stays where it is, we're not going to boost rates. That's very sensible. Very sensible. Glad to hear it. And same with the Fed. The Fed says, well, if the economy keeps going the way it has been last week, it seems to be a week-to-week thing now. Used to be, every 6 months, this last year, now we're going quarter to quarter, and now it's month to month, it's probably week to week. Yesterday will be the next one, Gee, things looked pretty good yesterday, and if that's the case, we might be looking at rate increase in the fall or whatever. This has been the joke in the industry for a long time. Things used to be done on a quarterly basis. Now results are measured almost on a minute-to-minute basis. And this is the advent of technology in our industry. But the reality is that you do have to keep a big picture view. While day-to-day trading can be very important, can make you money, the reality is the big picture view on how you set your portfolio, how you look at the the large macroeconomic picture is becoming more and more important because it's being looked at less and less, frankly, and yet it is equally, if not more important than ever. And the macro, at any time, when we talked just a week or so ago, we were talking about interest rates. I was saying right then, you watch, interest rates will probably be the same as it will, they're saying it will probably increase. So they think it will. But I said I wouldn't worry about it because at this point I don't see any very positive news coming in the big picture. And already we're already shown as correct on that. So again, keeping the big picture, not necessarily looking at the minutiae of microeconomics day to day to make your decisions. So if you're looking at, if you'd locked in your mortgage rate based on last or 2 weeks interest rate speculation, you'd be potentially, not necessarily, but potentially in a loser deal because it's possible the Canadian rates could drop a little bit. But I'm telling you right now, I don't expect it a lot. At best, I think it's going to hold where we're at. Most of the major macroeconomic picture guys, Pola's and the Fed Reserve and everybody, while they're looking day to day, they know that all they need is any kind of support for any negative news continuing, and they're going to just stand pat on their interest rate stance. They really don't have a lot of room to go down. But just keeping where we're at will make money supply at least more available for businesses and individuals, and won't put the individual under pressure in the economy. That's what we have to avoid, is not to put people and businesses under too much pressure under an increasing interest rate economy, if indeed there is no economy to support that increase rate. So if you're not making more in your salary, how can you be paying more in your interest rates? That's how we kill our populations and our economies. And I don't believe that's what we plan to do. So that's good news. I think that's the best news from all of this. As long as you're not in the oil sector for jobs for the long term, I think that would be a little nerve-wracking for some people in Alberta right now. I think there's a lot of nervousness in people in the oil patch. I feel for them. I think that it's important to keep an open eye on the door. But at this point, it looks as though it's stable. All the oil companies that are, even small patch oil guys, they're not going out of business at this price. They're just not developing more. They're holding pat. And I think the belief in the oil patch system, and the oil system, is, things are going to be pretty standardized. We're going to hang on. And that, if history holds true, oil will come back up, particularly if this Russian deal and things start to stabilize in the world again. Then maybe the Saudis will want more money for their oil, and then they'll put some taps on, and next thing you know, the oil price will go up back to at least a reasonable level. And I think it's smart maneuvering by the Saudis and others to keep oil low, makes it more accessible. It's very, very interesting times. Let's put it that way. As the Chinese said, we live in very interesting times.
Thanks a lot for chatting with us, Richard.
Thank you very much. I appreciate the time.
My guest has been Richard Knowles of Knowles & Associates in Vancouver. If you have any questions for Richard, you can send them to Richard K, that's the letter K, at customplanfinancial.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. We're also available on YouTube channel Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.